Welcome back, investors, to the Investing with Our YouTube channel for another video. If you're new to the channel, I am a UK-based investor focusing mainly on US stocks, and I started the portfolio I will be showing you today in April 2021. I am fortunate enough to have gone past the golden milestone having a 100k portfolio, and I'll be showing you the ups and possibly more importantly the downs of my investing journey. This includes the buys, the sales, and the dividend income I receive. So if you're a returning viewer, smash that like button. If you're new to the channel, subscribe so you can follow my journey. Now, let's get into it. Today's video is going to be summarizing the month of August, which was amazing, by the way. So up 3.7%, so just under £4,500. We finished the end of last month around just under 118,000, and at the moment we're at a record high of £123,089. It was an especially good week where the portfolio was up 3% for a £3,663 gain. The portfolio is really kicking on. If you look at the last quarter performance, it's up over £13,000. So last year I made a concerted effort of moving away from dividend stocks because I just thought this is a current time where it's a bull market. So I want to take advantage of growth. And if you see in the last year, I'm up 26% for a £23,000 gain. If you look at overall, since I started this portfolio in April 2021, we're up £31,000. So £23,000 of that came in the last year. So I'm really happy that I switched over to growth, but this might have to change maybe because there are fears that there is going to be a pullback at some point. So I might have to balance my strategy with having growth and more stable stocks. But I think my portfolio is fairly balanced overall. But yeah, the portfolio is doing really well. If you look on the right hand side, this is Google, which had a fantastic week, and the main reason was this. Alphabet stock soars after judge doesn't force Google to sell Chrome. Now, this was a very big piece of news for my biggest holding. If Google was forced to sell Chrome, then the share price would have gone down really badly. But the judge in this case say that Google wouldn't be forced to sell its Chrome browser. The judge also ruled that Google can continue to make payments to distribution partners for preloading or placement of Google Search, Chrome, or Gen AI products. So that essentially allows Google to continue to make its $20 billion per year payments to Apple in exchange for the iPhone maker using Google Search as a default search engine. So that meant that Apple shares went up as well, which I'm a smaller holder of. But this is fantastic news. And if we look at the share price, here we go. For the last week, it went from 208 after the ruling news broke out to just under 230, and in the end settled at $234 at the end of the week. Now, my position is getting close to the 5K mark, and this is amazing if you consider I was down for a while when it was hovering around $170. My average costing is $162.59 and currently at $234. I did think that Google would hit $210 to $220 by the end of the year, but with this landmark ruling, this obviously accelerated that, and there's no reason why Google can't get to 260 in the short to medium term. Now, the second major piece of news, which broke late Friday night, was Robinhood is now included in the S&P 500. This is amazing news for this holding. Now, I wasn't sure this was going to get in because the last inclusion had iBroker, which is another brokerage which did get in, which reduced the chance that Robinhood would get in this time round, but it managed it, and this is great news. So essentially what it entails is that anyone that buys the S&P 500, which is the backbone of many people's portfolios, a small percentage of that purchase will include Robinhood stock. So this naturally will push the share price up. I think I read a report somewhere that once a stock gets into the S&P 500 and stays within it, then within 6 months, the stock goes up about 18% roughly. Now, obviously, this doesn't mean it's going to happen to this stock, but generally the market moves up. But it has to stay in there because it does get rebalanced every so often. And there are companies that are pushed out for Robinhood to come in. And for Robinhood, it was Caesars Entertainment, which owns casinos in Las Vegas, amongst other things. So shares rose 7.3% in after-hour trading, which is amazing for a Friday night. And what's important is that in May, Coinbase, which is a crypto exchange, got into the S&P 500 too. So this suggests that there's going to be some bullish activity on crypto, and overall the market's good within that sector. Now, what's interesting is just before the S&P inclusion, the share price of Robinhood went from about 105 all the way down to 97. So it suggests that people didn't necessarily know this was going to happen. And this is a bit of an unexpected entry. But in the end, it settled at $107.33. I bought a lot of this in the last 2 months or so. And I have 100 shares. I'm down still on the overall holding, but I think this company I was bullish on anyway. But one of the theses was that it could be included in the S&P 500, and now I think this will do well. Now, I summarize why I bought Robinhood initially in video number 33. So if you want to watch that, I go through my thesis of why this is a good company. And as you can see, it's going in the right direction. Now, the other significant piece of news for my portfolio was this. Hims and Hers gains after court rejects Eli Lilly's case against Willow, which is another telehealth provider. So what happened here was a federal judge dismissed Lilly's lawsuit against Willow Health. So the main piece of news was that the judge said that compounded GLPs were deemed safe if tailored to patient needs. The ruling directly challenges key elements of Big Pharma's legal narrative, particularly claims that compounded medications inherently violate patient safety or commercial rights. It also supports the legitimacy of telehealth models that involve physician consultations and patient-specific formulations, which Hims does. So off the back of that, Hims' share price shot up from around 42 and settling in the end at 48. And this is a major obstacle that is overcome now. It seems like they can continue selling this, which is a major revenue contributor for Hims. And it was one of the reasons that it was being pushed down, because they thought the potential for being sued was great. So this is really excellent news. I have 161 shares. I'm still down on the position, but I feel this will be on the road to recovery. This will do well in the long term. Now, let's look at the dividends that came in this month. Not a huge amount. As I mentioned earlier, I've moved away from a dividend-focused portfolio, but I still get some. And for August, it was $38.99. If you look at back in the heavy days where my portfolio was more focused on dividends, I got £200 for August, and overall £2,817 per year. But still not too shabby. I'm getting close to the 1K mark. So which companies paid me? Let's have a look. For August, it was ASML for £1.20, MasterCard for £10, 2 pence, Apple for £1.74, AbbVie for £23.39. I no longer own this, so I won't be getting that anymore. And Costco for £2.64. So it's still nice to get these dividends, and September is going to be a big month already on £14.35. And I should get around £300 or so. So stay tuned to see what companies pay me in September. So if you've enjoyed the video so far, please give it a quick like, subscribe if you want to see how my journey continues, and also hit that bell icon so you get notified when I upload a new video. Especially the like is really important because it allows other people who are interested in investing to get to see the video, as it helps the algorithm. So thank you very much for that. Now, if we take a overall look at the portfolio, the month has been excellent, so there's going to be a lot of winners. But let's look at some of the losers first, because I like to be very transparent with my portfolio. And I think understanding that there are losses within the stock market is important, because it's not just green all the way. So let's have a look. In at number 5 is Microsoft at 5.71% down last month. We hit an all-time high last month of about $530 and currently at $494. My position is 17.76 shares, and I'm up just over £1,200. So still doing well on the position. Hims in at number 4, down 5.87%. But with this favourable ruling, I think this stock will recover. My position is 161 shares. I'm down £1,200. But again, I think this one will do well. Nvidia, surprisingly, in at number 3, down 7.43%. With a bit of a pullback. It hit all-time highs. It was the first company to go past $4 trillion market cap. So there's been a bit of a pullback, and that's okay. This is healthy. The overall semiconductor industry is still booming. I didn't want to make this video over long, but Broadcom had fantastic earnings, which I'll allude to later on, and the guidance from Broadcom was that the market will continue to go up, and so that this sector will be fine, and it's one that I'm going to be continuing to add to. In at number 2 is Centrica, which is down 8.23% for the month. And the general reason was there was softer European gas prices and general UK utility drop for the month. So this is nothing to be overly worried about. My holding is just under 1,900 shares, and I'm up almost 40% on this holding for an £829 gain. And the biggest loser for the month is Legal & General for an 8.31% loss. And the main reason for that was lukewarm guidance from the management during their recent results, and some analysts have downgraded a little bit. But this is one that I hold for the dividend, and I'm going to get that no matter what. So it's fair enough. I mean, down a little bit. Not ideal, but not the end of the world. Now, onto the big winners of the month. Now, before I do that, I just want to give a shout out to Imperial Brands, which is the first company to go past the £4,000 in gains mark, which is a phenomenal performance because it's a very big dividend payer, by the way. If we look at the overall payments by Imperial Brands, I've been paid just under £2,000. Look at these payments that I get. So Q1 last year, £177, Q2 £76, Q3 £65, Q4 £158, Q1 £158, Q2 £118, and again I'm going to get another decent sized payment in September as well. On top of that, it's got £4,000 in gains. So this is one of the best performers within my portfolio, and I might add one more tobacco stock because if there's a pullback, tobacco companies generally do all right. Now the second piece, just to go back on the Google ruling, I'm getting close to £5,000 in gains. This will be the first company to achieve this in my portfolio, and this will be amazing. Now let's look at some of the other performers. As I alluded to earlier, Broadcom had great earnings. It beat on both revenue and earnings per share, and more importantly, the management gave guidance where they think there will be significant upside in the coming 2 quarters. So this one flew after the earnings, and it was up just over 10% last month. My holding is a little bit modest, but I did add £1,500 worth of shares recently just because of the guidance given by Nvidia and the general sector doing well, and I think it will continue to do well. So I have 21 shares, up 70% for a £2,218 gain. In at number 4, surprisingly, Apple, which has spent a long time just being flat. In fact, only recently has it gone up for the year, but this is not a great performance for a Mag 7, and one of the reasons why I trimmed it. But it had a strong month, up 12.18%. My holding is just over 10 shares again. I had a bigger holding, but I reduced it. I think it's healthy to trim positions from now and then. We don't know what's going to happen in the future. And if companies start underperforming, then you can trim them, and this is one of them. But with the guaranteed payment from Google coming up, the share price went up, and I'm up 20% for a £317 gain. ASML, now this is really good to see. I've always been a bit mystified why this is down and the rest of the semiconductor industry is up. But this one had a good month, up 12.64%. My holding is very small, just over 1 share for a £55 loss. But again, this one should do well long term. It's pivotal in the semiconductor industry to a lot of these companies that are doing well, so it should trickle down. Google was number 2. Again, I mentioned it several times already in this video, but this is my biggest holding, up 19.81%. Hold 107 shares. And the biggest performer of the month, up 35%, is Oscar Health. Now, I don't know if you remember, but Warren Buffett had a secret holding, which was later disclosed to be United Health, which is in the same industry, insurance. And generally, there's what's called the buoyancy effect. So when certain companies do well in that sector, it pushes other companies up. But this one has had an absolute scintillating performance this month. So let's have a look at my position. I have 409 shares, average cost of £16.59, and it's currently now at £19.40. And I'm up £876 for a 17.5% gain. I was down on this for a long time. So hopefully, as you can see, here's my average, and it was there for a long time, and now it's up. So hopefully this will continue to go up, and I'm a firm believer that it will. So there you go. got a £5,000 position and up 876 on it overall. So just a brief glance on the rest of the portfolio. So Visa and MasterCard, two backbones of my portfolio, especially as there is potential pullback in the markets. I still haven't made any purchases for September. I'm going to wait until the end of the month and probably by then, just because there is rumors that there is going to be a pullback, and generally in September, historically, there is a pullback. But these two should be fine. So up 9.23% and 11% respectively. Meta up 26% for a £1,800 gain. Robinhood down marginally, but this one should be fine. Microsoft up 24% for a £1,274 gain. Carnival, this company is the biggest gainer in terms of percentage overall in my portfolio. So let's have a quick look at that. For the last month, up 5.9%. But if you look at the year summary, it's up almost 100%, so almost doubled. This is a really good business, actually. And they took on a lot of debt during COVID. They're paying that off and they're going back to profitability. If you look at their all-time high, it's about £50. This was before COVID hit. And as you can see, it's moving really strongly in the right direction. Oscar and Hims I've mentioned earlier. Tesla, let's have a quick look at the performance. Up just under 10%. So one that had a solid month as well. I have 21 shares and up over £2,000 on that. So really good. Nvidia and Broadcom we've mentioned. Amazon, let's have a quick look. Up 4.4% for the month. My holding is 25 shares and I'm up £744 on that one. And people are saying this company is the next one that should break out. If you look at assessing the 1 year high, so if it breaks past that, there's a chance that this can break out as well. Elgen we've mentioned already. Rio Tinto, although it's up for the last month, this is the problem child within the portfolio. And as I mentioned many times, I'm going to get rid of it. I don't want to sell at a loss, which I don't like to do. I'm going to be releasing a video where I talk about some of my sales this year. And most of them are in profit. And I don't want to add a loss to it. But eventually, if it doesn't perform, I'm going to have to get rid of it. But I'm hoping that it gets to green and then I can get rid of it. Mentioned Centrica before. Costco, let's have a look. Pretty much flat, down 0.5% for the month. My holding is just over 3 shares and I'm up £365 for an 18% gain. And the last one is KLA, which was pretty much flat for the month, up 0.76. I have just under 1 share for a £44 gain. So overall, just a quick summary, up over £31,000 and the portfolio at a record high of £123,000. So I'm really happy with how it's going. Please like, comment and subscribe so you can follow my journey, and I will see you on the next video.